Hi there folks, and welcome to another lesson. My name's Mark Burnell from integritytrading.com.au. Now folks, before we start, draw your attention to the disclaimer. Everything I speak about is for educational purposes only and should not be construed as personal financial advice. Alright, so with that out the way folks, let's have a look at just a quick lesson. There's a couple of concepts here that I regularly speak about. This is EuroCAD, and one of the problems that is always, when I say a problem, one of the areas of kind of contention a lot of times is after prices had a big move, often it will continue up, but I find that these sort of areas where it's extended away from the 20 are kind of lower probability. So when you look at the high time frame structure, beautiful push, you can see pushing right away from the 20 period moving average, which is in itself a great visual guide. So I always like to take trades at or near the 20 when it hasn't moved too far. So you can see, number one, this has moved quite a distance away. We've tagged the resistance here. So my concern always with these is that sometimes, yes, it will push, but I've found more than often, it's due for a bigger corrective, a bit more of a reset. And the 20 period does sort of come in like this, maybe not underneath it or on top of it like that. So that's always my concern. One of the giveaways that I find though, so if we looked at the 4 hour in isolation, we'd think that this is not a bad sort of setup. Now through here, and I did explain that there's a possibility this could go, but higher probability that this would turn into this sort of structure through here. So when we drill down, some of the giveaways, some of the things that I look for, number one, as we said before, where is it? Is it extended? And you can see here, look, it's miles, it's quite a distance away. Can it keep moving? Of course it can. But there's always that possibility that it's going to correct, and especially where it is, as we said before, right under here. So let's have a look at the 4 hour. So one of the concepts here also is the wedging pattern. So when we look at the 4 hour anchor, we can see prices come down. It's given us this wedging structure and that nice little shake off the bottom. So here's that wedging structure. It's more like a bit of a channel, but same concept, down, momentum slowing. There's actually a swing in there as well. So with these sort of structures now, you can see as soon as we get a break above here, our swing's confirmed, isn't it, from the low. So you can see no price acceptance, low momentum through here. And the targets with these, if you're able to get in early, the targets for these are usually each of the swings in this wedging structure. So you can see it's respected that. Why? Because these are the anchors. Certainly this one is the anchor to this 4 hour downtrend. So you can see it's tagged that. And we've got this pause here, which tells us that it's going through. And the other target is the second drive, or the first drive, sorry. So let's have a look at it in reverse kind of here. If you're able to get an early entry, target 1, target 2. Because often it will just continue up, and this is just simply a reset. Now that's in an existing trend. We're talking about this structure in a pullback, which is okay. So as we said before, my concern with this one is, okay, we've got no anchor break, we've got to push back up into here, but my concern with these is always that we're going to end up with an ABC like this because of where it is on the daily, such a big move. You can see back here, this wasn't bad, but this looked different on the daily. where this was a different location on the daily, not quite as extended. So this area here, do you get in? Now, if you do get in, knowing that the daily is probably, there's a high chance it's going to fail, you want to be on the lookout for when this does roll, because this is going to be the trap area. So one of the giveaways often with these is this type of structure. 5 down, 3 up in corrective structure, corrective channel. See this here? A little bit of throw over here. ABC. Look where the throw over is. And then what it does is head back down and give you 5 down again. So that is the classic zigzag structure. In Elliott wave terms, 5, 5, 3, 5. Then price heads back off again. All the while contained in parallel channel. So that would be what I would be looking at when we get a break through the low, and of course projecting down like that. So with that in mind, how do we know? So number one, we can see there's a bit of strength coming here. There's a little bit of buying here. It is still at the 20, so that there is a chance that this could move. The only way that I would get back interested in it, but keeping in mind the daily, would be a break above here. We can see it's already broken through, or it's trying to break through the bottom trend line. So the little intermediate ABC in here. So a break through this would kind of confirm our thinking that this is what it's going to be. Now it doesn't have to break the low, it can still penetrate here and then head off, but the point is that it's created that, or it's done that bit more complex pullback. And of course we're looking for if it does do that, looking for what occurs around the low for the possible C, shallow C, or possible AB equals CD. So I thought that was a good little concept. These are ones that are difficult. We can see that previous area here was here, not quite as extended. So you can see that's worked reasonably well. So that's what I'm looking at. Something in there. Let's see how it behaves. Always a bit of an issue, but keep in mind this extended look. Clearly see this big push due for some sort of profit taking and some sort of reset. So I hope that's helped, folks, and I look forward to seeing you in our next lesson. Bye for now.